Hello traders and investors, welcome back to the Trend Trader channel. In this video, we're going to be looking at the result from trading group. These are unaudited results for the 6 months that ended in February 2022. There are some things that I would just want to highlight as you go through this result. As a disclaimer, I have a position on Purple Group. Remember, I'm a stock trader, so I'm not saying that I have a long-term investment in Purple Group. I just have a position that I plan to hold for as long as I'm happy with the position. Okay. So now we see, if we go through this Purple Group result, like I said, it's for the 6 months that ended on the 28th of February 2022. So one thing that looks nice, at least on surface from this result, is the fact that the group revenue, it grew by 36% all the way to 137 million. So in terms, when we speak of group, we are talking about Purple Group. We are not talking about Easy Equities or GT247. We are just talking at the group level, the holding company. So it's nice to see revenue growing by 36%, over 30%, or even over 20% growth is somewhat acceptable. Now, if we go deeper, we look at this result, you can see that they say that the group cost also has increased by close to 40%, so it has increased to 93 million. But then they say that the cost of getting new customers into Easy Equities platform has decreased by 24%. So as much as we can see that the cost of operation are up, but also they claim that there's a slight decrease by 25% to 8 rand per client, meaning that now it costs them 8 rand to acquire a new client into the Easy Equities platform. And then the interesting part is that profit that are attributable to shareholders have increased by 114%. In terms of percentages, this is a great percentage. Then you look at the figure itself, it's 17.7 million. But if you compare it to the previous 8.3 million, then you can see that it's a nice increase. It's a nice 114% increase. But there is more that we are going to say with regards to these figures. Then again, that is based on the group highlight. Then if you go to Easy Equities, of which most people, that's where they have a high interest on, you can see that the revenue from Easy Equities, it increased by 27%. In terms of rand value, that translates to about 108 million rand increase. Now, the part that I find odd is that they say that despite Easy Equities clients' portfolio turnover activity returning to normalized level, which reflect the pre-COVID level. So I wouldn't know how investors were performing before COVID and how investors are performing now. There are a lot of claims on the social media space, but I'm not sure if people were trading less or more active before COVID, but it's good to see that there's an increase in revenue to 108 million. Then they say that, okay, this is irrelevant, the number of accounts, because some people are not actually trading. Even the balance of investors differs. Some people have less than 10,000 rand in their accounts. Some people have over millions there. But it's nice to see that they are growing. They have close to 1 million investors or people that have signed up to Easy Equities. So all I can say for any company, if they are interested in getting over 1 million accounts, then good luck to them. Then the platform asset, again, this is a irrelevant number because it tells us that they have 36 billion. But I mean, if you have 36 billion but you're only generating 108 million, it doesn't say much. But remember, they are offering us a cheap brokerage fee of 0.25%, and besides other fees that so it's not surprising. Then what is interesting is that the profit after tax, because what's the point of talking about profit if you haven't paid tax? So they have a nice profit of after tax of 23 million. So if you see, we have a revenue here that is coming in of 108 million, and then you can see the profit of after tax. I'm just gonna try and do a quick calculation of profit margin. I could be wrong, so those people that are familiar with the calculations of profit margin. So the number that I'm getting is 21%. How am I getting 21% profit margin? I'm taking this 108 million, or I'm taking this 23 million, dividing it by the revenue of 108, then multiply it by 100%. Then I'm getting a 21% profit margin, whatever that means in terms of commerce terms, but this is what I'm getting from this rough calculation. Okay, so now they compare it to the profit of 22.3 million. Now if you compare these two values, there isn't a significant change there. They also highlight that it's just a marginal increase of 4.3%, so it's not that great. Anyway, they are still profitable, even though it's not a lot. And then again, they hammer that point home that the cost to acquire a client has decreased by 24.7% to about 8 rand per client. Okay, and then again they talk about the acquisition cost and onboarding cost of a new equities client, which has dropped to 47 and 6.77 cent respectively. So the acquisition cost is about 48 rand, and then the onboarding cost is about 7 rand, right, compared to the high numbers, which was 61 and 9 rand. Again, showing that there is a decrease there. Then they've added these retirement funds there, which they say they contributed to after tax of about 3.4 million. Okay, so this is a new service. I'm not surprised that they haven't generated a lot of money from this. And then we also see Easy Crypto, which contributed 4.5 million, which is good. And then we know that Purple Group recently purchased the remaining stake in Easy Crypto, so now they own Easy Crypto in full. And then Easy Properties, I'm not a big fan of Easy Properties. There's nothing wrong with that. I prefer to buy a real estate via real estate investment trust. There's less stress for me there. But then again, it shows that there's an increase of 255% in terms of active clients that are investing, but they don't say how much money is invested in Easy Properties. I guess if you were to dig deeper into the Easy Properties result, that is where you're going to get more information. But it's nice to see that there are more people that are interested in the product that they are offering. As a stock trader, I previously used a GT247 to trade CFDs, but I have stopped. There were some issues in terms of the brokerage. I wasn't happy with the service that I was getting, but that is over 3 years ago, so things could have changed now, right? So when you look at the revenue that came from the CFD brokerage, it's about 25.9 million. Then to just compare the two, it's just revenue. So this revenue is about a quarter of a revenue that is generated by Easy Equities. Then when we look at the profit after tax, we see 4.9 million. So let's do another calculation, quick calculation there to see which business is more profitable. So it's 25.9 times 100%. So we get about 18.9%. So we can see it's clear that Easy Equities, in terms of profit margin or percent profit margin, Easy Equities takes the cup there compared to GT247.com. And then the good thing about this is that there is an increase from a loss of 3.3 million. So when you look at the loss, so there we're looking at of an increase in profit of about 7 million, which is great. It's a good set of results, but there are things that I want to cover despite this good set of results. So one thing that worries me a lot with Easy Equities, you look at the net asset value per share. They say that it has increased by 11.9% from 31 cent to 35 cent. Why I'm saying that this is worrying? Remember, the net asset value gives us an indication of whether the company is trading at a discount or it's trading at a premium. It's not a perfect figure. You're gonna get whatever information that you're looking for from that figure. But if we just go with the conventional wisdom that if the current share price, well, it's not like, again, it's not a perfect thing. If the NAV is greater than the current share price, then we say that that share is trading at a discount, and most people, they love to buy companies that are trading at a discount. But if the net asset value is lower than the share price, then we're saying that the share price is trading at a premium, and nobody wants to buy shares that are trading at a premium. This then prompt one to ask the question, with the current share price of Easy Equities at R2.80, why are we buying Easy Equities, or why are we buying People Group when we know for sure that it is trading at a premium? If you take the current share price of R2.80, you divide it by this 36 cent, you can see that it's trading at 7 times or 7.7 times. Remember, I'm just making quick calculations, not perfect calculations. So why are we paying 7 times for People Group? Remember, it's not about, here we are investors. It's not something that has to do with emotions. We need to take emotions out of the equation here and make sensible investment. I'm not saying that People Group is not a good company to buy. The question is simple. Why are we willing to pay 7.7 times for this share? I would like to hear your views on this. Please make sure that you comment there, you share why. If you are an Easy Equities or People Group investor, please share why are you happy to pay this premium. Obviously, the people that bought the stock below 35 cents, they've got nothing to worry about. They got the share while it was trading at a discount. But anyone that bought People Group above 50 cents has in essence paid the premium for this company. Yes, the company is profitable, it's growing. I would like just to hear your thesis. Why are you investing in this company? Then once again, like I said, I have a position on People Group, so it's not like I'm hammering a company as an outsider. I'm in there. My rationale for buying People Group was purely based on technical analysis, and we will go and look at the chart at this moment. Then just one thing that I want to remind you is that these are unaudited results, so they're still going to give us the audited result. Remember, when the results are unaudited, there's a possibility that the company has understated or overstated some of the figures that they've gave us. So once these numbers have been audited and then there is a bit of confidence in these numbers, I would like to see, obviously in terms of profitability, I would like to see a People Group continue to be profitable, because as a shareholder, you just want to see your money generating more money for you. And then another thing, if you look at the earnings per share, they increased by 91% from 0.85 cent to 1.63 cent. So that is a nice increase, especially if you bought a People Group below 30 cents per share. Then at least then you know that you are getting a bang for your money. But if you bought it above 150 or so, then there isn't much exciting that you can say there. But then once again, let's wait and see what the final audited result are going to tell us. Now, why did I buy a People Group? Well, we were looking at this dip, so we saw that a People Group, people were excited buying the stock. We didn't get an opportunity to buy as it was going up there. Then when it was trading around R2.20, it then started to pull back at this level before going all the way up to R2.60 per share. So we didn't have a position when it was trading at R2.60, but as it pulled back to this R2.20, remember this acted as a resistance level previously, so we were expecting that the share price was going to find a support here. Then we have a limit, we had a limit order somewhere around R2.20 per share. Then we were able to get this nice ride all the way to about 340. We sold half of our position there when we reached 340, which was the previous high. And then now the share price is pulling back. It's currently trading at around R2.80 per share. So now what we wouldn't want to see, we don't want to see People Group coming back to 20, because it means that the half of the position that you still have there is just going to go back to break even instead of us having a profit there. So what's the plan for us moving forward? We don't have a problem with holding People Group as long as People Group is trading above this level. As long as People Group is trading above 220, the share price that we paid for it, we don't have a problem with it. But if it starts to trade somewhere around R2.10 or R2 per share, then we will exit our position there, because it will mean that our stop loss is triggered. Remember, our trade on this is just based on technical analysis. It is not based on fundamental analysis. what we shared with you on the result is just something that we saw, and then we saw that, okay, maybe let's look at the result and share our opinion with the viewers and subscribers. And if you haven't subscribed yet, please consider subscribing, and if you find this video useful, please consider liking this video and sharing it with as many people as possible. So once again, at this moment, we are waiting to see if Easy or Purple Group, not Easy Equities, is going to pull back somewhere around 240 or below 240, and then we anticipate that it can continue to bounce further up, but that is not taking the net asset value into consideration. If you take the net asset value into consideration, then it gives us a grim picture, because the net asset value is somewhere around 35 cents. It would be a shame if we see the share price drops all the way to about 35 cents. We don't want to see that. We do not short stocks, even though the results are not that exciting. I mean, it's profitable, but it's not wow numbers. Remember, Purple Group is not a big company. It has a market cap of about 3.something billion. Let's just check to ensure that we are giving you the correct figure. But in terms of the market capitalization, Purple Group is not really a big company. You can see the market capitalization there. We are looking at about 3.3 billion, and then if you look at the trading volume, it trades about 2.3 million shares per day. They haven't paid a dividend since they are profitable. I hope when the final result or the actual result, the audited result come, maybe they declare a dividend from those 23 million rand profit. It would be nice to receive a dividend from Purple Group, but if there is no dividend, then well, we are happy that we've made money from our short-term trading position. So yeah, that's it for today. That's all that I wanted to share with you in terms of the Purple Group result. So once again, guys, remember, whenever you are trading or you are investing, we do not use emotions. All our investment decisions come from the charts themselves. They don't come from how much we love the company. We don't have a problem with a Purple Group or Easy Equities. Whenever we just want to put our money where we are more likely to make money, we're not trying to give these companies our money for free. We want to ensure that at the end of the day, when we sell our shares, we are able to get a profit, or while we are holding those shares, we are able to generate a dividend income from those companies. So we will see when they come with those audited result how things are going to change, and then we would like to see if the board is going to declare a dividend from Easy Equities. So that's it for today. If you haven't subscribed, please consider subscribing. If you enjoyed this content, please like this video. We will see you on the next video.